What is operating segment? According to Mfrs, an operating segment is a component to an entity that engage in business activities from which it may earn revenue and incur expenses, including revenues and expenses related to the transaction with other components of the same entity. Operating results are regularly reviewed by the entity CODM to make decisions about resources to be allocated to the segment and assess its performance, for which discrete financial information is available. The standard is applicable to entities whose equity or debt security are publicly traded, or in the process issuing security to the public, or who voluntarily providing segmental information. Information about the different businesses, activity and economic environment is important to assist users of financial statement to better understand the entity part performance, better assess the entity risk and return, and also make more informed judgment about the entity as a whole.
When we talk about the Chief Operating Decision Maker, or we call it CODM, under Mfrs, we are not necessarily referring to a person with a specific title, like a Chief Executive Officer. Instead, the term CODM refers to a function, specifically the function of allocating resources to the entity's operating segments and assessing their performance. In many organizations, it is easy to identify the CODM. It is typically the Chief Executive, but in more complex entities, identifying the CODM can be more challenging. Why? Because it depends on how the entity is managed. The CODM function must be carried out by the Chief Executive Officer, the Chief Operating Officer, a senior management team, or even the Board of Directors. Typically, the CODM is the highest level of management where operating decisions are made. But if a supervisory body must approve those decisions, we need to use judgment. In such cases, we must decide whether the supervisory body or the management team making the recommendation is truly the CODM. Now, here is an important consideration. Can the entire Board of Directors be considered the CODM? Possibly, but entities should challenge that assumption, especially when the board includes both executive and non-executive directors. Remember, the goal of Mfrs is to report the internal management information used for making operating decisions and monitoring performance. And that purpose may not align with the typical role of a non-executive director, whose responsibility by corporate governance standard. It is oversight, not day-to-day decision-making. In summary, identifying the CODM under Mfrs is about understanding who performs the function, not who holds the title. So, as we can see, example of CODM from Hapsen Group Berhad Annual Report. Board of Directors. The sustainability statement mentions that materiality assessments and sustainability matters were presented to the Board of Directors for review and approval. This suggests that the board plays a key role in strategic decision-making and oversight, aligning with the role of CODM. Group Managing Director, which is the head of Group Sustainability Committee. On page 94 in Annual Report, it is stated that the Group Managing Director oversees the group's sustainability and climate-related implementation and updates the board. This role includes discussing performance and aligning strategies, indicating the Managing Director function as a CODM in the context of sustainability and strategic planning.
There are two types of segmental report used in financial reporting for Hapsen consolidated Berhad, which is business segment reporting and geographical segment reporting. For business segment reporting, the company is organized into business units according to their nature of activity, and there are 6 reportable operating segments, which are plantation, property, credit financing, automotive, trading, and also building materials. It is important to highlight the revenue, operating profit, and also identifiable asset in order to calculate the reportable segment. For reporting purposes, a reportable segment is one that meets any one of the following quantitative thresholds. Firstly, revenue. Its reported revenue from sale to external customers and inter-segment sales is 10% or more of the combined revenues, either it is internal or external, of all operating segments. Secondly, the profit. The absolute amount of the segment reported profit or loss is 10% or more of the greater of the combined reported profit of all segment reported profit or the combined losses of all segment reported losses. Lastly, the assets. The segment assets are 10% or more of the total asset of all operating segments. The other segmental report used by the Hapsen Consolidated Berhad is geographical segment reporting, which report categorize financial data based on the geographical location of operation or customer, such as in Singapore, China, United Kingdom, and also Indonesia.
At the heart of responsible and effective corporate reporting lies a clear commitment to transparency and accountability. That's why our latest report goes beyond the surface. providing detailed financial and sustainability data across each of our 6 core business divisions. These divisions include plantation, property, credit financing, automotive, trading, and building materials. By breaking down our performance at the divisional level, stakeholders can better assess each division's unique contributions, their specific risks, and their overall operational impacts. But our transparency doesn't stop there. We also provide comprehensive geographical and operational insight, covering our presence in Malaysia, Singapore, China, Indonesia, and the United Kingdom. This regional reporting gives users a clearer picture of performance trends across different markets, the sustainability of our supply chains, and the challenge and opportunities unique to each region. Ultimately, our goal is to enable informed decisions, whether you are a stockholder, investor, or analyst, by delivering data and is both comprehensive and strategically organized.
Mfrs 134 Interim Financial Reporting set out the minimum requirement for reporting financial results for periods shorter than a full financial year, such as quarterly or half-yearly reports. Its main objective is to ensure that the interim report provides timely and reliable financial information that is consistent with the entity's annual financial statement, helping users make informed economic decisions. The same accounting policy used in the annual financial statement must be applied, and materiality is assessed in relation to the interim period. Entities must present condensed financial statement, including statement of financial position, profit or loss, and other comprehensive income, change in equity, and cash flow, along with selected explanatory notes. Comparative figures for the same interim period in the previous year and for the most recent year end are required. Mfrs 134 also required disclosure of significant events and transactions that have occurred since the end of the last annual reporting period, which also could affect the financial position or performance of the entity. There are 2 significant events and transactions that affect an entity's financial position and performance since the end of the last annual reporting period. Firstly, full acquisition of World Furnishing Hub Private Limited enhanced asset control and profit consolidation. On 18 January 2024, Mfrs Private Limited, a wholly owned subsidiary of Mfrs Holding Limited, complete the acquisition of the remaining 90% equity interest in World Furnishing Hub Private Limited for RM15.757 million. This acquisition made WFHPL a wholly owned subsidiary and grant Hapsang full control over strategic leasehold property in Singapore. As a result, the group will now consolidate 100% of WFHPL's financial result, eliminating the non-controlling interest and potentially enhancing future profitability. The transaction also increased the group non-current asset base while reducing cash reserve and may give rise to goodwill or a gain on bargain purchase depending on the fair value of net asset acquired. Secondly, partial divestment of Sera Positive Sdn Bhd alter ownership structure and reduces future control. On 20 November 2024, Hapsang Land Development Sdn Bhd, a wholly owned subsidiary of Hapsang Consolidated Berhad, complete the transfer of 300,000 ordinary share representing 30% equity interest in Sera Positive Sdn Bhd to Zalhin Development Sdn Bhd for a cash consideration of RM300,000. Following this divestment, Hapsang ownership in Sera Positive was reduced from 100% to 70%, resulting in Sera Positive becoming a majority owned but non-wholly owned subsidiary. This change reduces Hapsang's future control over Sera Positive decision and profit entitlement, as 30% of the subsidiary's results will now be attributed to non-controlling interest. Financially, the group received a modest cash inflow while retaining control interest, and may need to reassess consolidation impacts and related disclosures in subsequent financial statement. Next, according to Mfrs 134, Hapsang Company interim reporting period use a quarterly basis. This statement provides a snapshot of the company's financial performance and position during the financial year before full year audited accounts are released. In this example, we are looking at the second quarter for financial year 2024, covering the period from 1st October 2024 to 31st December 2024. For comparison purposes, the same 3-month period from the previous year, 1st October to 31st December 2023, is used as the comparative period for financial year 2023. These periods are applied consistently across all key financial statements, including the statement of profit or loss and other comprehensive income, the statement of changes in equity, the statement of financial position, and the statement of cash flow. This consistency allowed for a meaningful year-on-year analysis, helping investors, regulators, and management evaluate the company's progress, detect any red flags, or identify growth opportunity. Understanding these reporting periods is essential for interpreting the numbers correctly and making informed business decisions.